So what is it that really has the dairy market's attention and focus right now? I would say it's two really key major factors. It's the strength of the dollar, and it's what the weather is going to bring come the summer of 2013. The dollar has been in about a 10-year downtrend, and it's showing some very significant signs of turning around. It's broken through major resistance on the charts, and it's really showing signs that it's bottomed out, and all the technical indicators are starting to look pretty bullish on it. That's bad news for dairy. As the dollar strengthens, that means that our exports become more expensive to the world market, and our exports are going to suffer. So that can be a very, very negative factor. The other big wild card as we look forward is the weather this summer. If we have a drought, grain prices can go sky high, and that could really, really squeeze producer margins and dramatically impact milk prices. If we have good weather, we could have very good grain production, obviously, and that'll send the markets in the other direction. So those are the real two big wild cards as we look ahead over the next 6 to 12 months. So what can we really look forward to in the year ahead? I would say, number one, you've got to expect great uncertainty. This shift in the dollar could dramatically impact the markets, and the weather is the big wild card. We could get a double impact from both of those factors. If everything goes well, we could see milk prices go up another $1.50 from here, and that's even moderately likely in the short run. The problem is, on the downside, if the dollar strengthens and the weather goes the wrong way for us, is that we could easily see milk prices go down into the $15 range, and eventually, longer term, go back into the low teens and maybe even into the $11 or $12 level long term. So that could be very, very devastating. So on the upside, we see a buck and a half. Downside, it could be $2 to maybe even $6 down. So the downside potential is possibly as much as 2 to 4-fold greater than the upside potential. So you need to be prepared for both. And there's a lot of uncertainty here, but you've got to realize that that downward risk is there, and you need to be planning and be prepared for it. When you talk about really what's got me spooked, or should have any dairy producer spooked, I would say it all comes back to this uncertainty around the weather. You can't predict the weather, and it's going to have an extremely dramatic impact on the bottom line of producers. There's already a lot of guys out there that are only making a little bit of money. Some of the Western producers are already losing money. If feed prices go up dramatically this summer, a lot of people are really going to get squeezed very, very substantially. So to me, the feed ingredient side of the profitability equation here in the year ahead is probably the biggest wild card, and the thing that producers have to be by far the most worried about. And it's easily managed. I believe to a great extent you have to plan and be prepared for any of the possible scenarios, which would be slightly higher milk, dramatically lower milk, dramatically higher feed, and moderately lower feed prices. Those are really the four scenarios that are probably the most likely. And they're all manageable. If you're forward pricing feed, you may want to buy some puts against inventory that you've bought. If you aren't forward pricing feed in the cash market, I would suggest buying call options. On the milk side, you need to be taking advantage of any rallies in here to be getting priced. The point is that you've got to be proactive. You've got to basically take action, and you need to invest and manage these risks and uncertainties. You cannot sit back and wait to see what happens, because once these things start taking place, the initial moves of most market moves are very rapid and very fast, and by the time somebody figures out what's happening and reacts to it, at least a significant part of the move, if not the majority of the move, is often already over. And oftentimes paralysis sets in, and you basically start going, I would have wished, I would have, could have, should have, and then you don't do something today because it's at so much worse of a price than it could have been yesterday or a week ago. Yeah, and so it's very hard to chase markets, and it's much easier to proactively do things in advance and think ahead. So I would strongly encourage you to be proactively thinking about how you're going to manage your feed price risk over the next 6 to 12 months, and how you're going to manage against that downward price risk in milk, which could be as much as $6 to $7 to the extreme, and it certainly is a few dollars lower, which is more than enough to take a lot of people into the red. So that's my thinking today. Hopefully you find it helpful.